When I think of what has happened, and I kind of put it in my own words and kind of tell me if you think this makes sense. It appears to me that like prior to 2008, we were, I would say, from a financing point of view, probably irrationally exuberant. We were accepting things and doing things in a way that was far too probably casual and not nearly diligent enough. And then we got past 2008, 2009, 2010 timeframe, and it seems like we became irrationally fearful that things that should have been done weren't being done. And my gut is that we are now in a place that's probably balanced. I don't know. Does that fit with your thinking, or is that different?
I will agree with you that the pendulum certainly swung very, very hard the other way. The basis and the premise for so many of those things that had us in that exuberance stage was the fact that everybody thought real estate would continue to go up, and that was the underlying collateral for so much of the paper that was in this country, whether it be personal or business paper. When that changed and it swung across, there was no one that was willing to take those first steps, and that's really where the SBA came. The Small Business Administration Loan Guarantee Program came into play and really kind of helped a lot of this through that. Regardless of your political leanings, the Obama administration has done a lot of good through that SBA, and using the SBA as kind of a pump to prime that pump and let some got the banks back with those guarantees and the additional programs they put in to start everything flowing again.
And that comes from
right now, Rick. I will also agree with you that we are in a fairly balanced state. Most loans that most people that are creditworthy and that have been able to maintain that creditworthiness through the past hard time years are now able to be there. We are able to write paper for them, and they're going to have more choices than they used to. So
it also seems to me that whereas previously, if you had bad credit, let's say you had a foreclosure on your house or something like that previously, it would be almost irreparable, the damage it would do. That you'd almost have to wait for that to sort itself out. But it seems that today, people are a little bit more forgiving of some of the things that people have on their credit just because it's so prevalent.
You're absolutely right. I was going to say that when you're seeing a very small percentage of your borrowers that would have those type of items on their credit, it becomes a much harder, and I mean a harder stop, a harder line in the sand disqualifier. Well, now you've got a lot of very good people that some bad things happen to that have managed to pull themselves up through it and get out and put their lives back together, put their credit, heading in the right direction. But the lenders are much more understanding of that than they would have been in 07, 08. If you're looking at that same type of borrower might have a better chance today in some cases than he might have had in 07 when those things would have been big red flags.
It's really amazing if you think about that, isn't it? It's a very different world from that point of view today than it was before. Before we were very liberal, but if you had something like that, it was like you say, it was a hard stop. Now we're far more conservative, but it's not necessarily a hard stop.
Yeah, well, you've got folks that, especially in the real estate marketplace, that they were in that situation really through no fault of their own. These aren't the people that had 100% mortgages or interest-only mortgages. These are people that had saved money, bought a house, and done all the right things, and then found themselves, hundreds of thousands of dollars upside down, and put themselves in a place where they just couldn't survive. Well, you lose a job or something on top of that, even if for a very short period of time, you can't sell the house and move on. You have to keep making those payments. So it put cash flow strains on a lot of folks, and the story told the right way. I mean, you have to document those things. You have to, when you're going through the lender and presenting a borrower that we would say has a story, you have to document that story and make sure you're telling 100% the truth. But the lenders will continue to look at a lot of those cases that they wouldn't have looked at in the past.
And that's really what you do at FranFund, isn't it? It's not just packaging it, but it's packaging it in the right way and presenting it the right way to the right people. That gives it a higher chance of success, right? That
is exactly what our objective is to even someone that has strong, good credit, the better that it's packaged and putting it in right at the front, people can get better rates, better terms, a more competitive situation for that loan from various lenders. I mean, I think it's a service that, most people are not used to operating in that commercial lending environment, and it's different than it's different than personal credit. It's different than consumer credit. It's commercial credit's a whole other animal, and if you can get to the right levels, you can even get even better terms. So